Alrighty, traders. Well, welcome to the US election here in 2020. We can go ahead and take a look and see what's going on with the markets. We've got a lot to talk about. We've got 3 days that we're going to be talking about the US elections, how the markets are going to be affected, currency pairs that are going to be affected, stocks, how they're going to be affected. We've got a bunch of stuff that we're going to go ahead and chat about in today's session. I want to welcome everyone here. First, number one, if you haven't subscribed to our YouTube channel, make sure you go ahead and smash the like button, but also subscribe to the YouTube channel so that you can get any videos that we do upload and post. You can get access to that as soon as we post them. My name is Gary Fickard, Director of Trading here at Market Traders, and I've got Chris and Tyson with me today. And we're going to be talking about, not just today, but of course in the next couple of days, we're going to be talking about how the US election is going to affect the markets and how we're going to be able to trade it. We're going to be talking about different strategies. We're going to be talking about ways to identify directional buyers. We're going to look at short-term and long-term trading opportunities. It's going to be absolutely awesome, and we're so glad to have you guys here with us. Now, before we get started, I want to go ahead and talk about what the 3 days look like. What is the agenda for the next 3 days so that you have a better understanding exactly what to expect. So let's go ahead and take a look at this right here. And as I go ahead and move the stuff through to the agenda, it's a jam-packed agenda. As you can see right here, we've got game plan day one. Game plan is ready to go ahead and talk about the stock market, just get a very clear overview of the stock market and the currency market. We're going to be discussing that between Chris, Tyson, and myself. We're also going to be taking a look at systems and strategies that we're going to be using inside the event itself, and that's going to be absolutely awesome too. Also, very importantly, we're going to be looking at support and resistance levels, breakout levels, where the market's range bound is going to break out. We're looking at currency baskets as to what we need to watch and what is going to happen. And that's going to be in day one. Remember, day one doesn't just consist of this session alone, but also consists of the second session that's going to be this evening at 8:30 p.m. All right, and that's going to be also for about an hour. Now, very importantly as well, we are going to share the link for day 2 and day 3. You'll have the link shared. Chris and the team will be sharing the link inside this YouTube channel for you to be able to get access to day 2 and day 3 if you have not already got access to that. Now, day 2, we're going to be looking at live trading as the elections take place, as the results come in. Now, I'm going to tell you straight up, I don't believe we're going to get the results on day 2, but if we do, we'll have, look, if we don't, we're definitely going to have a fair idea of exactly what is coming in and how we can assess that information. But we'll talk about that a little bit more with Chris and Tyson. Now, day 3, we're going to go ahead and talk about what the next steps are. What is it? We're talking about volatility in the market, how that's going to create the next big push for us as we move into 2021. Where are the stocks going? Very important question. And very importantly, what are the best currency pairs to trade on that pair? Now, as you can see, I have Chris and Tyson in the house right here, and we're going to be talking about all that stuff. Very exciting stuff, very important stuff to go ahead and talk about. And so I want to go ahead and open up the floor with Tyson and Chris and say, guys, welcome to what is exciting 2-3 days from right now. What is exciting? What are you guys thinking about as the momentum starts building up into this event?
Yeah, Chris, good to see everyone. This has been an event that we've been preparing for, talking about now for what seems to be forever. And now we're finally here. I'm going to disagree already with what Gary just said a little bit. He said we may not know, we may not know what the outcome is going to be after tomorrow night or into the third day. I actually think that if we're using logic, we will know the outcome. The media might spin that we don't need to know the outcome. We may, who knows? But I think most people are going to be able to draw a conclusion
Tyson,
because
are
there's
you saying
important states. Maybe we'll get into that tomorrow a little bit, but and I want to make sure. I think it's important for everybody who's watching. We're going to show you. We're going to tell you what we're doing in the markets. We're going to tell you what we're doing in our own portfolios. But I'm not afraid to put my own opinions out there also, and to tell you kind of what. And I'm not afraid to be wrong on those. But what we will do is this: we will prepare for either outcome, any outcome that could come our way, and that's the most important thing. And so I'm excited, Gary. I'm excited about what's coming. There's going to be a lot of movement. One thing I just said in a webinar is I said, regardless of what happens, the volatility and the movement's going to be awesome, and it's our jobs to make as much money as we possibly can with whatever outcome.
Now, Chris, Tyson's already called me fake news right at the beginning of the session. What is your view as to what are you thinking is going to happen tomorrow as we lead in? Look, we've got a lot of things to talk about before the time comes, but just quickly just to respond on Tyson there, what do you think? Are we going to get sort of the results? I don't think we are. I think we can have an idea, but I don't think we actually know.
I don't know. I mean, I think the reality is, like, how can you look, we are in this session today. We're in these 3 days together so we can prepare. I mean, I think going into this, the one thing that's actually really nice to see, and we'll get to the charts here in a little bit, and we get to spend a lot of time together, is there's some really clean structure where the market has to break, certain highs, certain lows to cause me to take some action. Otherwise, I'll say this, my kind of plan for trading is going to be, we have our game plan today for this session and our next session later on tonight. We have our trading session the night of the election. Tomorrow is going to be insane. It's like we'll be streaming this thing online. Like, I don't know who we're going to watch. I mean, Gary, you probably want to watch Fox News. I might watch CNN. Well, it's going to be like Tyson said, like the news might say one thing, and I know that like Zuckerberg and Facebook is talking about how it's going to kind of test the platform because who knows what's going to be out there. And I'm following these different simulations, but it's like, look, all that noise boils down to what are we going to do to trade it? So I mean, regardless of what's happening, like what I'm more interested in seeing is tomorrow night, as this is all unfolding live, is price actually doing something? And so from Tuesday's evening session to Wednesday's entire trading day, that's really like the big window where it's like, if we're going to be trading intraday or short term, that's the window that I expect to be the most active. And I said this in my weekly outlook that's actually going to post in the next couple of hours. I might have like a 24-hour marathon myself. Like if there's a lot of movement on Tuesday night, I might just, trade through the late, Asia session through like midnight, 1 o'clock, maybe take a power nap and then get up and trade the London session. Like I'm just prepared. I want to be in front of the charts. I want to be around. I'm looking to be, pretty active. It's like we have been talking about this for months. And so these clean levels that I talked about, the market's either going to make breaks or it's not. And if it's not making breaks, we have a big enough structure inside the stock market, especially from September's high and low, that the market's just going to bounce off those. That's like a 10% level. I mean, I think the NASDAQ dropped like, I think 10, like maybe 7, 8, 9%. The SPY was down 6 or 7%. And the Dow was down like, 10 or 11%. I mean, we've had some pretty significant sell-offs the last couple of weeks. So if it's ready to bounce on good news, no news, fake news, like again, all that stuff is really out of our control. We need to focus on price. We need to focus on the big levels, and we need to assess the volatility. I think if we assess the volatility, that will tell us whether or not we're looking to trade really actively this week, or maybe it's better to stand aside and let the dust settle. But to answer, this is my 1 minute summary, to really think about, do we know or what do we expect? It's like, we don't know. Nobody knows, it's like, because look, this is testing democracy. This is testing voting. It's like you've got popular vote versus electoral college, absentee ballots at a record high. I mean, turnout seems to be higher than usual, and certainly in years past. So this is the type of election that has galvanized bases on both sides, or, whether it's a Trump base or an anti-Trump base or Democratic swing, blue shift, red shift, we don't know, And so, I mean, and I know that we've, like the three of us have had very interesting conversations on where we stand, but to this, what we are is commonality wise, we're traders and we're looking to be profitable. Like we want to be smart. We want to be, strategic and tactical. and make sure we're making good decisions. And now having, thousands of traders watching us, it's important that we just pay attention to what the markets are doing.
Yeah, all right, can I say something real quick, Gary? And
sure.
I got to hit on this, and it's so important what Chris just said. We look at the markets. All three of us look at the markets in a very similar way, but we kind of see the world sometimes in a little bit of a different way when it comes to politics and all that. But we can set that aside, and we're all trying to make money. But what Chris also said is important, that let's just trade what is going to happen. And here's one thing that I'm pretty certain of. There's nothing that's going to happen today that's going to be like so important that's going to throw me off tomorrow. So it is vitally important that everybody listening is in tomorrow's session and in Wednesday's session. That is where the nuts and bolts, that's where, to mix metaphors and analogies, that's where the rubber's going to meet the road. And that right there is where we're going to make our decisions. And so tomorrow and Wednesday is when it's going to get really exciting. Now today, we can start to, and even more in tonight's session, we can start to really plan. In fact, I was going through some of the workspaces I plan on sharing through this event, and looking at the dollar basket of workspaces, put together a quick video. And Dollar Swiss is looking like one of my favorites long term. But I've got a dollar basket setting up that I'm actually looking for some really interesting kind of fake out moves followed by some longer term moves, technically speaking. So I'm looking at like 3,000 plus pips potentially between now and the end of the year, but it's not going to start. My point is this: it's probably not going to start in the next 24 hours. It's probably going to start in the next 48 to 72 hours. It's going to take a little time to let the dust settle a little bit. And in tomorrow and Wednesday session, that's when we're really going to start to put the pedal to the metal, for the third analogy.
Yep. Well, I completely, I completely agree. I completely agree with both of you with regards to, if we're going to, folks, and listen, if you're going to be trading based on the market reaction without really confirmation from the technicals, I think we're going to lead ourselves into some trouble. We have to be very aware of the fact that there could be a lot of whiplashy spiking happening before we actually get as Tyson said, before we get the dust settling down. So we're going to be very, very sure that when we take on some trading opportunities, that we're using the confirmation with the technicals to be able to support what we're seeing right there. And I think that's very important. And you're right. We probably not going to really know until we know, what's really going to come out as the result, and then how the market's going to react to that. But I definitely think this, though, and I'm going to bring us to this slide right here, because I think it's good conversation around here, and you may have all had access to this slide. We have sent out this document to everyone. But I want Tyson and Chris, I want you guys to talk a little bit about what the U.S. election means for the markets, in the sense of, we've got a slide up here with the S&P. How that affected, how that's going to affect or how that's going to be affected by the presidential election as we roll out here. Chris, you want to start it off, and Tyson, go ahead and chime in on this.
Yeah, so basically that chart that's on the screen right now, all I was looking at for the last couple of months is I'm just trying to find what is the historical context of market performance with the presidential elections. So what you're noticing is, that vertical line is the election. And so 1 month prior, 3 months prior, 6 months prior, it's showing historically over the last 80 plus years where the markets have been and what it means to potentially who is gaining power, who's winning the election. So, for example, Trump is the incumbent. And so you can see that one option is the incumbent party wins when the market has been performing positively going into this election. And I think that was all kind of thrown off because last week's slide put the S&P at neutral territory. Like the S&P for the year is up like 1% for the year. So, I mean, we're essentially back to flat. And the month of October was a negative month for the S&P, right? So that's what I was thinking, is just historically, where does it perform? But what's interesting is you look at from election day onwards, it's always a rough go the first couple of months, right? 1 day after, 1 week after, 1 month after. And then by the end of the year, even if Trump loses, the market's looking at, again, historically, this could be taken out of context, but it's looking like the market's going to somehow find a way to defy the odds of if Biden wins, the market crashes. If Trump wins, we get Trump trade 2.0. We don't know that's going to happen. I will say that historically, if a president's in his second term, the markets tend to perform poorer or worse compared to the first term. So if Trump is going to stay in power for another 4 years, Trump trade back in 2016 could be priced in. It's like there might be limited upside to what we're dealing with. We have a pandemic, we have an epidemic, we have a recession, we have businesses closing left and right. I mean, it's like the landscape out there is still not great. And COVID cases, I know, weighed on the markets heavily last week. I know that the tech sector is under some fire. I see a lot of great structure in the market that looks like we could be pointing to bearishness, but we've just never had, other than March, we've just never had like a full-on bearish catalyst again. So this what you're looking at from the PDF side or just some of these charts is, I just want to see, look, we can sit here and like blow out all these opinions of Trump wins and Biden wins and here's what's going to happen, but the reality is, what's the market done historically? And the fact remains that historically speaking, the markets perform better under a Democratic president. Okay, fine. Historically speaking, the second term is never as good as the first term, historically speaking. So, I'm trying to take like 80 plus years, 90 plus years, and I understand that past performance is not indicative of future results. We know we can't tell the future, but at least it gives us something to plan around. So that's where
Chris,
I took.
What I find interesting about this, just real fast, is this is like kind of laying right in with what I was going to analyze, what I'm going to go deeper in tonight about if a Biden wins, I see a potential kind of, we're going to get some new policies and things are going to be good rally into the end of the year, followed by more flat, more maybe not as good performance in the stock market. That's historically what it says. Mm-hmm. We get a big pop, kind of excitement for new regime or whatever it might be, followed by maybe not as great growth for the first year. So you said that the incumbent typically underperforms the second year, but it looks like they overperform the first year. So what I'm seeing here is the first year of let's say Biden wins, we may not have great stock performance, but then year 2, 3, and 4 could be great. Is what I'm looking at here. And then what I'm also seeing is if Trump wins, and this kind of lays in with, I want to create a plan if Trump wins and if Biden wins. If Biden wins, I'm looking for potentially, based on this, a rally up almost right away into the end of the year, kind of that, new regime, new policies. What does all this mean to the markets? And then if Trump wins, we could potentially see a sell-off down to some key levels to position for a nice big bounce into next year. That's what I'm seeing on this chart.
Yeah, no, that makes sense. And again, I mean, right now you can essentially take September's high and September's low, and prices stayed inside that. I mean, the S&P 500, the NASDAQ, the Dow Jones, they're all sitting inside that structure. The Dow bounced off those lows, and I think somebody asked a question, why are the markets up today? I mean, we're looking at the SPY's up less than 1%, the Dow Jones up 1.2, the NASDAQ's flat for the day. I mean, again, there's about an 8 to 10% buffer of where price really has to go to break out into some new territory. Otherwise, we could be sitting here stuck and churning for the next 48 to 72 hours until the markets are a little bit more certain on where they want to go. And what we've said before, this session is, we're running this today, but typically, the three of us get together for these Ask an Analyst sessions. And we've been talking about the likelihood is that all this could be premeditated, right? Everything that's about to unfold, that's about to happen, the market, the market, it's like there's a lot of powerful forces that are moving these markets, but the market could already be predetermined. And we're just sitting here trying to make good judgment calls on when it's safe to participate, when it looks like the coast is clear, when the big moves are coming, when the big moves are confirmed, rather than guessing right now. If we guess right now, we have to have a stop plan. We have to have an exit strategy in case we're totally wrong. I'm not really comfortable calling the top in the stock market. I'm not comfortable calling the bottom either. So we're just looking for the cleanest movement overall. And again, that's why it really is at the end of this. And I don't know about you guys, but it's been exhausting to see how front and center politics are right now. To the point of enough, I just want to break. I think everybody works from home. Everybody's had a bad enough year as it is. And now it's just like, there's not a day that isn't about Trump or politics or this election or COVID. It's really just a lot to absorb and it's a lot to take in. I think the U.S. just needs a break. I think the world needs a break. Europe is putting in, more lockdown measures. Nobody's immune to this. It's like, so I don't know if we just become like this week is a spectacle for the U.S. and the world is watching, or if we somehow find a way to get through it. But it's like, I just think at the end of this, I want to make some money. I want a mental break from all this, and so that's why it's like, rather than getting caught up and heated in all the opinions and this market means this, or Trump wins, Biden wins. To me, I'm just like, you know what? I don't care about that. Like, I'll deal with that. I'll deal with that politically when it's official. But I don't know if that's this week or next week or the end of the year. We don't know. But
well, we got a couple of things, Chris. We got a couple of things that we got to go ahead and chat about today, and obviously we have the Supreme Court confirmation. We still have that coming up.
Yep.
We have, of course, the COVID stimulus round 2 that we need approval on that, and we know it's not going to happen before the elections. I mean, that's a no-brainer right there. But we have that up. There's a few things that are obviously going to also predict the outcome of a Trump-Biden win, and that is, of course, we take a look at the voters. What is the turnout? Historically, we've seen that 56% of them have voted. Will 2020 be higher? That's the question behind there. Will that be higher? Is it going to be in-person voting? Are they going to have the with the COVID-19? Are they going to have the certain things in place in order to make people comfortable going in and doing in-person voting? All of these things, safety protocols as we speak about it, social distancing, all that good stuff. Are there going to be ballots that are going to be rejected? And if they are, could that swing the election? I think it could, but could that lead into an election that we may not have a final result until everyone's sure that everything's been done the way it should be done? This is why I'm always considering that the final result that we may get may not be tomorrow. This is the concern that I have. But I think at the end of the day, if we go ahead and take a look at the actual, I mean, right now we can see that Biden is leading the polls, but there's a lot of voters that have not voted yet, and they are voting on the day. So tomorrow it will definitely be a change in that race.
So here's what I'll say about all of that. I think this is we always say this is the most important election in our lifetime, and I think this is going to be, whether it's the most important or not, I think it's going to be the most polarizing, even more polarizing than 2016, because we had just come off of Brexit, a big surprise. So I don't want to say people were conditioned to the surprise, but it was like, oh, man, you know what? We had an example of where the media got it completely wrong with the polls and all that just a couple months beforehand. This one here, hardcore right Trump advocates are absolutely certain they're going to win. Hardcore Biden advocates are absolutely certain they're going to win. It's going to be, I don't want to say it's going to be chaotic, but what it's going to do is it's going to throw massive curveballs in the market, which causes huge opportunities for us because the volatility is going to be huge. And here's what I think. My prediction is the volatility is going to be higher than it is now. It's going to be maybe not quite what it was in March, but I think it's going to be sustained for quite some time. I think this volatility is not going to just be a volatile move for a day or two or three. I think this volatility is going to be sustained possibly for months, maybe even into the first half of 2021, which means anybody trading with strategies and trading in our trading rooms and being with us, I'll tell you, I think that the next 6 months, regardless of what happens, we should have a plan of making this the best 6 months of trading, regardless of who wins, that we've ever had. That's kind of my thing, is I think this is going to be a polarizing event, regardless of whoever wins. And that polarization is going to cause a ripple on one side or the other. And that's going to cause massive volatility, which provides you and I with opportunity.
Yeah, and on that note, I just wanted to say that has been the one thing that I've been – so coming into 2020, I was probably the most confident and most bearish that I've ever been in the stock market. Like, and again, I was confident enough that I was actually short the stock market last year in December. I shorted the SPY, I shorted the Qs. I was like, I'm long inverse ETFs, and I held them until everything happened in late February, early March. I was also long volatility. And that was what I was going to say is this go around, I'm not as certain as the top in the markets, right? Like, I don't know if the stock market is going to see new highs in the next couple of weeks. And we have again, we get through this week. We're not that far away from Thanksgiving and holiday trading. The market just might have its own plan and own agenda for the next couple of months. So I would say that, just like Tyson said, the winner here, I think the clear winner through all this is volatility. And last week I closed up VIXI call options. I was long the VIXI for 125% gain. And I took it way before the expiration. The expiration was 11/20. So it's 18 days out. And I'm like, I'm taking it. It was such a good run in short amount of time. I want to protect the profit. That was on Wednesday's peak. I'm still long the ETF, and I'm going to hold it. I think that we have sustainably high volatility going through this week, and like Tyson said, maybe for the next 2 to 6 months, which I'm totally fine with. I mean, maybe not to the extreme. I mean, March's extreme high in the VIX was comparable to 2008-9 financial crisis. Like, that was just catastrophic, markets overreacting, circuit breakers triggering left and right, and we got up to those 10-year highs. But for the most part, I mean, we could easily see the VIX, I think, back up to $40 to $50 again.
Yeah, let's take a look at
it takes a lot of fear to drive that thing higher. We're at 37 right now, but we could easily spike to 45, $50.
Yeah. Let's take a look at the dollar index here. Take a look at the chart right here and give me your thoughts on the dollar index. Right now, you can see that we have this breakout here. We saw a nice little breakout here on the dollar index. Broke out of the upward trend line. And then we closed out with this. We've seen this big falling wedge right here, which indicates price wants to move back up again. If I go to zoom in a little closer up on this chart, we can see there are some range-bound trading. You see the stock market had some ranges that it never broke out of. You see the S&P, the same thing. Same thing's happened to dollar index. We've had some September and October highs and lows that price is traded inside that area. In fact, it's been a little tighter. We just recently started breaking out right here of those highs right there. We started breaking out in today's trading. It struggled a little bit, but today's trading is starting to break out a little bit right here. So we're getting a little bit of an early breakout. And but on the upside, we've got a lot of potential for the upside. Now, if we go back to 2016, and I always go back to, it gives us a fair idea of what exactly could happen when we have sort of. It's not going to be a definite. If Trump wins, it's going to be a big, strong move to the upside on dollar index. But it gives us sort of an idea. And if I look over here at 2016, when
Huge
Trump
move.
did win.
Yeah, huge move on that. And what was interesting is that move on the dollar also coincided with a big move in stocks, also coincided with a big move of risk on trading. It was a weird correlation to see tons of dollar strength, but also tons of stock strength. And
what it was? I think it was a whole lot of funds and people not quite sure what to expect. So they were just buying everything. They're like, okay, let's just buy everything because if he ruins the economy, then guess what? The dollar will strengthen as a risk off. If he doesn't, the dollar will weaken long term and the stock market will go up. So it was almost one of those, I have no clue what to expect.
Just buy.
Let's buy everything.
Yeah. And honestly, Tyson, we had something similar to that this year, right? Like we saw dollar weakness for the most part prevail, but we had a stronger stock market. Obviously, after, we started out the year with a stronger stock market, had an awful flash crash or awful crash for the next, late February, mid-March, took like 2 to 4 weeks to play out. But then you look at the V bottom in the stock market, the rally that ensued, but also gold breaking to new highs. Once we broke 1365, gold goes to $2,000. It's like, and I know you've got some great opinions on gold, like long term and what it means inherent value wise. But it's like you had equities is the only place to get yield. You've got gold as the ultimate hedge. You've got like the dollar that really just got crushed this year because they're like, well, the Fed is crazy bearish or crazy dovish right now, and so the dollar just kind of took it on the chin. But again, we're right back into, are we going to be in a risk on, risk off environment? The dollar's been sold off too fast, too far. So it's starting to come back. I know we look at some dollar strength, but
my argument is this. I actually see a bullish dollar mid to longer term into 2021, regardless, because I think that we're going to potentially get a somewhat of a relief rally thinking, okay, we've got a new regime. If Biden gets elected, we got a new regime coming in. Let's wait to see how this tax policy plays out. The new Green Deal that will bankrupt the world. How is that going to play out?
Are you saying Biden's going to win, and that's why you anticipate?
This is what I'm saying. In fact, I just gave a hint on whether I would like that or not just now. But but I will say this.
Wow.
So I think it will set up for a longer term risk off trade, which the dollar will be a safe haven asset.
Right.
However, saying that, if Trump wins, his whole policy is based around his approval ratings, and his approval ratings from his mind is the stock market. He's going to do everything he can to inflate the stock market, which means we have seen inflation. Look at lumber prices, look at new home sales. We have seen inflation starting to tick higher, and I'm telling you, 2021, if Trump gets elected, the Fed is going to have to start aggressively changing their stance on inflation, and we're going to see a stronger dollar because they're going to have to start raising rates. It's going to have to happen. And so I'm bullish on the dollar. Either one, because inflation starts to get out of control under a Trump regime. And some of you might be like, well, that's good. Well, is it really good? I mean, are we really wealthier, even though we maybe feel wealthier when we turn on the financial news networks? I'm not sure. We can have that conversation later on in these sessions. But either we're going to have inflation, rates are going to have to go up, dollar's going to strengthen, or we're going to have, I believe, a risk off, maybe a fairly big risk off trade into 2021 with new tax policies, all that kind of stuff, and just a flight to safety on. Well, here's the deal. I think Biden could get elected and not ruin the economy and the stock market still go down 30% simply because of capital gains rates going up, all that kind of stuff. You got to think about how many baby boomers have huge profits in right now that would rather pay a 21% capital gains rate rather than a 38% or a 40 or 35 or whatever it is. Got to think about that. If I have $2 million of gains in investments over the last 10 years, do I want to pay 21% or do I want to pay 35% or 40%? That's a big deal. And so we got to think about those kind of things. So no matter what, I see a bullish dollar.
So let me go ahead and say this. So if it's bullish dollar and you're thinking Biden win on the bullish dollar, let's just take things for instance.
By the way, I did not say Biden win. I said regardless of who wins.
Right, but let's put it this way. Let's say it is a Biden win, right? And would you be, if it is a Biden win, would you still be standing and say, would you still stand and say, hey, dollar strength?
Absolutely. Yeah. In fact, I think more dollar strength with the Biden win.
Okay, so more dollar strength for Biden. Okay, so let's take a look at a couple. In stock market, do you think stock market will rally the same that we had in 2016?
I think the stock market, based on my technicals and based on what Chris just showed, I actually see a stock market Biden win stock market rally into the end of the year, followed by a sell-off in 2021.
Gary, let's go back
interesting.
To the charts. Go back to the dollar index. Let's look at the 2016 dollar. And again, we're trying to draw a conclusion here from 2016. We saw dollar strength. We saw the Trump rally, right? So are we here 4 years later to see the same thing? Is it dollar strength stock rally? Like, I don't think it's the same thing. So again, politics aside, I mean, just take the stock market overall. We've had an 11-year financially engineered run. I mean, I'd say the stock market is 2 to 3 years overextended, thanks in part to really accommodative policies. And I know that everyone is drinking the same Kool-Aid and all central banks are doing the same thing, but this isn't real. Like, Tyson, you've had the old acronym, the JICJET acronym, where it's like, if you look at what really matters, fundamentally, we're not in that scenario to give us the real ingredients for higher highs in the stock market. So, I mean, look, I'm prepared for volatility. I'm prepared for sideways movement. I mean, like, seriously, we could be going up and down for maybe a 10 to 20% range for maybe the next 12 months. All that means for traders and investors is volatility and opportunity to buy low and sell high. So if our mindset is like the stock market always has to go higher, part of me thinks like that's not the case. In fact, it might be better to just trade what we see, which could be great structure, great levels to buy from, but know that we should be protecting those gains as opposed to just buying and holding. I'm saying that because I have friends and families that have, consulted with me or asked me about, like, what do I do with my 401k? What do I do with my retirement? And they've made almost minute gains over the last couple of years. I mean, you're talking about 30 to 40% drawdowns, and then they're coming back. They're like, oh, well, I'm right back where I started. Good thing. It's like you missed out. Like, the way to make money is you got to buy dips. You got to add to it. You've got to take your profits and protect your profits. So,
but saying that too, Chris, you got to be okay with missing some. So I agree 100%. So here's what I would do for the layman here. I'm not here to give it any advice, but for the layman, I would say, hey, cash, we break above the highs, get back in. We don't, then you know what? Look for a place to buy at some nice support levels, maybe 10, 15, 20% lower. Either way, you either miss out on some of the upside just a little bit, or you're able to capture and get huge positions or much bigger positions than staying in right now. But a lot of people forget that cash is actually a position. They think they have to stay long all the time. And I agree with another thing you said, Chris, is this time is different. What's really going to drive the stuff, I'm going to go on record and say this. The market is not going to rally in 2021, regardless of who gets elected. Period. The growth is done. We're gone. Now, I think the market in 2022 will be much higher under a Trump presidency than it will be under a Biden presidency. 2021, I think it's going to be disastrous no matter who wins. Because, again, it goes back to my acronym, JICJET. It's about jobs. It's about income. It's about consumption and growth, earnings, dividends, and even buyback. And I don't care who you are. No matter what president gets in, we are in a mess. This is a mess of a situation, and we're going to have to figure out how to get ourselves out of it. And 2021 is just going to be kind of one of those cleansing periods. It's going to be, and it's going to be bad for regardless of whoever gets elected. Now, again, I think long-term, if you're just looking at it in the stock market, I think the stock market is going to do much better in 2022 under a Trump presidency than it will Biden, simply because of capital gains taxes, simply because I get to keep more of my money than I would under a Biden. That's the crux of the situation.
Yeah, I also got to look at the things like we also got to look at things like if COVID-19 does continue to increase, will it be under a Biden watch? Would it be good for the economy to have a closed economy? Because that's what he's looking at, right? He's going to look to close.
It'll be good it'll be good for the zoo. What you do under that is you look at what rallied really big from March through August, and you say, okay, those stocks are going to continue to do amazing, like Netflix and these Zooms. They pulled so many of their earnings forward because their growth just shot up, skyrocketed, because people didn't have a choice to do anything else but sit at home and Netflix and sit at home and Zoom.
Oh yeah, there will definitely be stocks. There will definitely be stocks that we can go focus on based on what happened in the last 6 months. So
here's the answer to that, in my opinion. The gap, Gary, and this is it's really sad, actually. I believe that if we continue shutdowns, the gap will widen. Some people will feel better and more wealthy than they ever have, and a lot of people will feel like crap.
So what you're saying is, if the country goes to crap because of the financial things, there's still going to be money to be made on stocks that are doing well.
100%, but you got to know what you're doing. There's going to be places to hide out, and as Chris said, there's also inverse ETFs on. So what you can do is you can kind of do what I call a pairs trade or a hedge trade, where you can buy some of these online stocks, let's say a Zoom, and you can sell other stocks that are going to go down if a 3M or an industrial stock goes down because the economy's bad, but these Zoom stocks go up. Well, you can do kind of a hedge trade or a pairs trade with that. So yeah, it wraps back to make sure you guys, regardless of what happens, make sure you're with us in our trading rooms. You have the strategies. And tonight, real quick plug on this, tonight's session, we're going to get more in detail on granular plans of what we're doing and strategies, because I'm going to be using Turning Point Max in a lot of these. But here's the deal. Chris just created a strategy that I'm excited about, because Turning Point Max is going to capture a lot of the move, for me, a lot of the move of where we're at now. It's going to leave some money on the table after we start to accelerate in some of these. So I want to use a strategy either like Right Trader Max or even Trend Seeker to make sure I capture a big body of that. And we're going to talk more about that tonight.
All right, well, good. And also, we've put a lot of focus on stocks and that, but currencies, what currencies are we going to be looking at? I know that there's certain currency pairs that I've already gone in and identified as a good trading opportunity. Pound Swiss franc, for some of you that don't even look at the pound Swiss franc. Pound Swiss franc is looking good. In fact, we had a session today on the Euro JPY and Pound JPY, both of them, in my opinion, technically setting up for a rally. Now, will it be a short-term rally because of Biden or Trump win? We don't know. We'll have to go take a look and see the details after the fact. But we're definitely looking at a setup on Pound. In fact, Pound JPY, let's jump into it. Let's go and have a conversation around that. Let's just take a look at the charts right here. And let's just go into Pound JPY right here. And I'm already, I had a session this morning, guys, for those that don't know. And we already spoke about 3 setups right here. Pound JPY, looking for rally, and then, Euro JPY and Pound JPY right here. These are based on one of the strategies that we followed that we're going to be talking about in day 2 and day 3. So we're going to be talking about those strategies, but we've already seen this week for a Pound rally, Euro JPY rally out of the JPYs. We've seen an Aussie JPY rally as well, but the Aussie JPY has moved pretty much most of the morning already. But look over here on the Pound JPY. If I go look at the daily time frame, we set up a trade last week. We'll talk about this a little more tomorrow in day 3. But you can see right here, we're looking at a buy option down all the way up to about 141 and change. So we're looking for a nice little rally. We called it the Trump win rally, just based on what we've seen right here. But what we do have right here, we also have some sort of protective positions in a sense that even though we're stacking up on this position, if the market does move back after it takes out some lows right here, we'll have some time to make some additional changes if that occurs. But also one thing I want to point out here as well, for those that are watching the pound JPY, we also have a not a divergence level, but we also have sort of a support level coming off. If I go ahead and compress the charts a little more right here, and I go, you can see right here we got a lot of support coming off this level right here, and that's around about 125. Now, given the fact that the pound JPY has moved up off those support levels about 1,000 pips, so we've got about 1,000 pip buffer between where price is trading now to where the major support is going to be sitting at. So 1,000 pip buffer. When I look at this, and Chris and Tyson, you can give your opinion on this too, but when I look at this and say, hey, listen here, there's 1,000 pip buffer right here, which means that if the pound JPY doesn't go bullish over the next few days and it starts going bearish, then I look at this and say, hey, anywhere here is going to be buying opportunities if I look to chase the market back up again, whether it's going to be a long-term rally or a short-term rally. I believe there's going to be profit potential to the upside. Now, the reason why I'm not selling at the moment right now will all be dependent, of course, based on whether or not the market allows us to get in, because we all know that as we're heading into the election period, there's going to be some changes in the brokers. I don't know, Chris, if you found anything through any of the brokers that you trade with. I haven't got any news on any sort of spread changes and some margin changes as of right now.
Not explicitly. But I have a feeling in the background there might be some funny business going on. We probably have some subtle margin increases that I haven't had any official correspondence. I've been asking traders in my trading room for the last couple of weeks, like if your brokers are sending you any correspondences with an increase in margins or watching for high volatility periods around the election. I haven't seen that officially. But I've also noticed that, the margin for me on yen pairs have gone up. The margin for me on Swiss pairs have gone up. So there's been some subtleties where I haven't seen any like official notice. But,
so I think it's important.
I'm definitely paying attention to. Yeah.
So I think it's important that everyone realizes that this year, if you traded 10 currency pairs before and they're all being based on JPY crosses and other pairs and so on, keep in mind that you may not have as much margin as you thought you had previously. So if you're a little bit over leveraged, a little bit deep into your positions, you may want to go ahead and reevaluate that as we're heading into this week. And also keep in mind, and Tyson, I want your comments on this as well, we don't just have the US election out this week, although that'll be the biggest focus right now. But we have data coming out this week that traders also need to be paying attention to. And if you go take a look right here, we've got rate decision coming out for the Aussies today. We've got the cash rate coming up. We've got the statement that's going to come up. I know that there's going to be a lot of focus on what goes down in the statement, but you can already see that the cash rate is indicating a possible forecast of a cut in rates for the Aussies today. So we're going to a possible rate cut in the Aussies. We've got the presidential election coming out in the next couple of days.
Is he popping in and out for you too?
Yeah, I think we might have just lost him.
Okay. Who? Did I pop in and out?
Are we still live?
I think so.
Yeah.
I've still got a live stream. Let's chat. Give me traders out there that are watching. Will you give us a little A/B test if you can still hear Tyson and me? Will you type in like Chris Tyson if you can hear us? Gary will try to wait. I mean, if we're frozen on the economic calendar, that's fine. We can just run something. But let's see if we're live.
Yeah, I was just looking at this as we're waiting for Gary. This is a crazy week. This is you look here. We've got the Australian rate statements. We've got the New Zealand employment data. We got employment data coming out at the end of the week. This is going to be a crazy week. Did we get Gary back?
Yeah.
Am I back?
Yeah, we got you, Gary.
Oh, okay. I don't know what happened there. I don't know why I got cut off. Maybe it was the Democrats that want to cut me off. No, I'm just kidding. Just kidding. All right. So, yeah, we got a lot of data coming out right here. We've got the official cash rate, I said, for Australia. They're looking to cut the rates this evening. We've got the US election. We've got Bank of England. We've got their official rate decision, which they can keep the rates unchanged. We've got the FOMC statement and press conference. We've got the non-farm payrolls. Man, guys, are we kidding? There's a lot of stuff coming out this week, man.
There is a lot of stuff coming out this week, and it's kind of crazy that I look at this and it's like, manipulation all over the board, not just by the Democrats, but by everybody in the world.
It's throwing out so much. It's like, let's see what traders can handle, right? It's like,
craziness.
Here's all the economic news. Here's a ton of earnings. Here's a presidential election. Like, just get it all out there and just let the algorithms and the black box traders just go nuts.
It's crazy because I look at this cash rate cut in the Aussie, and it's all due to the inflation of the currency that it's had over the course of the last 6-7 months from that March bottom. They love that bottom, by the way. That was huge for them. They wanted to weaken their currency essentially for export-import reasons. Maybe not as much as it did weaken, but this big massive rally for them. They look at this and like, well, wait a minute, we'd kind of like to weaken it. However, people, you got to understand that Japan has been notorious for trying to weaken their currency for literally about 35 years. And you have the dollar yen that about 35 years ago that sat over 200, 250. It's done nothing but sell off and sell off and sell off in the face of them trying to weaken the economy or weaken their currency. And the reason being is because it's a cheap source to borrow from, and people hoard that to then try to find spots that they can go and buy risk assets for. But a lot of the individuals are not finding huge opportunities. So it's going to be very interesting to see how this all plays out. I will say this, though, Gary, based upon your pound yen, what's very interesting in the money flow trading room and the Turning Point Max trading room, this month, rolling into November, first day of November, our top trade for the month is none other than the euro yen. And I got to be honest, euro yen buy. And I am not a fan. Anybody who's been around for a while, I am absolutely not a fan of. I love the yen pairs. I love them. I've made a lot of money off the yen pairs, but I hate buying yen pairs. And it's because I'm kind of a perma bear, and that's not a good thing. That's an emotional thing that I have. Because I try to think logically and everything that's going on in the world. And I know if you and I went out and racked up $5 million worth of debt and we can't pay that, guess what? We go bankrupt. And that's not what happens in this world, in the governments and all that. And what's crazy is the euro yen, the CAD yen, the Aussie yen, all the yen pairs, including the pound yen, are poised, from my analysis, for a great rally. However, I think that rally, again, regardless of who wins, is going to be short-lived. It's going to be a quick pop, 1, 2, 3 week pop, and then it's going to be sold aggressively. But as of right now, Gary, I'm 100% with you on the pound yen being bullish. I personally, I would allocate more towards the euro yen or CAD yen, but I think both places are all yen pairs are poised for a nice rally at these levels.
Well, let's talk about that. I mean, okay, so let's just take euro yen, and I've got the chart open right here so everyone can take a look and see what it's set up technically right here. We've got a nice little divergence level setting up right here. It's certainly looking for a rally up to around about, I've got a target. Let's see where that target's at. There's a bit of resistance. I won't call it, it's a target, fourth wave move right here. We're looking for around about 127.50. So that's about a 500 pip rally that I'm expecting right now. And I believe the euro yen in 2016 did move about 900 pips during the week of the election. So let's dig into this a little bit more.
I don't think we're going to get the same type of move. Here's the deal. I'm going to kind of talk out both sides of my mouth here, but I think this is going to be the most polarizing election ever, and people are going to be thrown off. However, it's not. It shocked the world in 2000. It's going to shock half of the world. This one, right? The last election, even those that were voting for Trump and loved Trump, they still kind of doubted. Like, I don't know. I hope it's Trump. And they were really, but man, it shocked everybody. There wasn't any Trump supporter that was willing to say, absolutely, my guy's going to win. However, now both sides are willing to say, absolutely, my guy's going to win. And so I don't think we're going to get the massive 1 day, 2 day moves like we did in 2016. I think we're going to get bigger overall moves in the next, 2 weeks, 2 months, 3 months, but I don't think we're going to get the same 1 or 2 day reaction. What do you think, Chris?
Let's just talk about this, Chris. I'm going to let you give you some time to discuss this, but I want you to put this in your thought as you go ahead and answer. Why would we see a Euro JPY rally? And give me the two scenarios, a Trump win or a Biden win. Why would we get a Euro JPY rally? I think it's important for the students to know that.
Okay, well, my thoughts have nothing to do with the euro yen or the pound yen, because I think the pair to watch is the dollar yen. I think the pair to watch is an Aussie yen, because we're talking about, how the market's going to react with respect to risk on or risk off trading. Look, the dollar yen, it's like a bull or bear that goes into hibernation for 10 months a year and then wakes up and does something for a month or two. And we saw that back in March. Like the yen came alive with, 112 down to 101 and then back up again and then all the way back down to just choppy trading. The last, 3 months, it's been sideways from 104 to 106. Dollar yen is like crap, but it's providing clear areas to trade. I'm a big believer that dollar yen, if we break below 104 and sustain that break, we're going to 101.50, if not 100. But if we break above 106, I think there's room up to 111. Like literally both sides, I'm looking at a 400 to 500 pip breakout on dollar yen. But we have to see it. So there's nothing to do on that pair unless we see some clear confirmation.
What about fake breakouts? What about the fake breakout?
What about
what about fake breakouts? I mean, we got that 104 level right here, absolutely. We got 107 up here, maybe 106 over here. But what about the fake breakouts? What if it stays just range bound and it fakes you in and out of the trade, which is possible. I mean, I call this currency a currency from hell for many years. Back in 2001 when I traded this, and you're right, Chris. If you look at the pair right here, it is horrible the way it's been trading. Yeah. And yes, there is this breakout strategy that can be used on this, but it could also be a pair that doesn't stay in a direction. It fakes out both sides, bullish and bearish sometimes.
Yeah. So look, you've got the chart up perfectly. What traders need to do is what you are noticing is that low in July, it was July 30th or so, and then a low again in September, and then the low again just last week. They never closed below 104. So if we have a daily close below 104, or by the end of this week, if we close below 104, I would be bearish down towards 101.50. And again, that's conservative. We had the big low around 101.20 back in March. So that's at least 250 to 300 pips of downside if we confirm a break. So like Gary's saying, what about a fake break? Well, a fake break, wait for the daily candle. At the least, let's wait and see what a daily candle looks like. Because if we close with a wick at the bottom, it's not a close. That's not a close below. So we're not going to be faked into this trade. And that's one thing that I've learned over the years with yens. Yens are not about leveling in to me. Yens are not about calling the top or bottom. Yens are about, if this thing breaks below 104, bear flag, bear flag, bear flag, seriously, like bear flag breakouts until 101.50. And put a stop loss in at break even or better and watch the thing tank to 100 and just see how big of a profit run you can get, but protect it. Because on the flip side of that is and I don't know, I've actually talked about this in my trading room. I'm throwing a hypothetical out there of if we see like 101.50 on the dollar yen, I could also see, and Tyson, you're a big supply and demand trader as well as along with me with pockets. I could see we have one that was created around 106. We have pockets around 109. We have pockets at 111. I could see a move down into 101.50 and use that as all of those supply levels, right? Would that be supply?
Yeah.
Or demand?
No, that would, at 101.50, that'd be demand.
Demand levels. So all those demand levels, all those now I'm seeing pockets to the upside, all those demand levels at those levels, and we just had this again. If we're seeing this, Trump rally, confusing Biden rally, stock rally, like something that's going to just justify, like we don't know what to do, we're just going to buy everything, and it goes into risk on trading. And I could see a 101.50 getting hit. I could see a ridiculous trade rally, just presidential election rally, catalyst rally. And we somehow come back and just find all of those missing pockets at 106, 109, 111. And then after that, and again, I mean, that's a huge spectrum, right? Like 110 to 100, that's 1,000 pips. But I mean, unless we do something outside of 104 or outside 106, I'm not touching the dollar yen.
It's so interesting that you say that. I actually have this, and this is one of the charts that I'm going to share tonight. I typed it out before this session. I've got a bullish bias on it. But the trade is this. I'm not buying right now. I typed it out exactly like this before the session. I said, look to buy on a daily close above 106.12. Target 109, stop 103.95. Now we break below 103.95. So to kind of say what Chris said, we break above 106, close above 106, bull flag, all the way up to 109.
Just go with it. Yep.
If we close below 104, bear flag, all the way down to 100 to 101. That's a phenomenal plan. And that's basically exactly what I'm seeing too.
And Gary, you can bring up the dollar yen, and let's go to 2016. And I just want traders to see the reality of what a bull flag and bear flag look like, because 2016 is exactly that. And I'm not saying that that's going to be recreated or it's none of that matters. I'm saying that just right now, the market's so consolidated for these last 3 months that those are the clean levels. We've got to get above 106. We got to get below 104. So if you look at that move on a whatever time frame that is, Gary, daily chart, weekly chart, if
this
we
is
take
daily,
that area, if we box that in and go into like a 1 hour chart, we go into maybe if you can go back that far, I know that's 4 years ago, but a 1 hour chart was going to show this. You're going to see a big push to the upside, indecision, a big push to the upside, indecision, a big push. It did that for, it was from really the lows were like 101 to 118. I mean, it was like a 1,500 pip rally in a month.
Another thing that I want students to focus on with that, if once you're done with this, Gary, if you go back to the daily, the importance of what Chris said to start this whole conversation, which is wait for the confirmation close. Yeah. We got that massive wick lower, didn't close. Anybody who thought that this thing was going to hell in a handbasket, you lost a ton of money and you lost fast. But if you waited for the close, the confirmation to break above or below, you made a ton of money. So it's waiting for those confirmations to happen. Don't get too quick to try to think you know what's going to happen. Wait for those confirmation closes, bracket them off. And I got a feeling tonight, Chris, we're going to be talking a lot about bracketing off some levels in different markets. And I think that's a great way to do it. You think about this, guys. If we can just figure out, find some of our favorite currency pairs, bracket off the levels. Let's buy above here. Let's sell below here. And then, okay, here's the strategies I want to trade. If we break above here, here's the strategies Gary wants to trade and Chris. I think that's a phenomenal plan for all of our students.
I agree. And I mean, not for the students, but for us too. It's like that's how we're going to plan it. Yeah. I mean, we're planning around it. If we're going to see any action, like I've got to see price in clear levels. I've got to see an open space. I've got to see confirmation above or below. Otherwise, you just got to be prepared for, volatility and really choppy price action.
Yeah, and on that subject, I mean, everything we're going to be talking about, students, by the way, for folks that don't know, everything we're going to be talking about are strategies that we are going to trade, or at least looking to trade. So when we put these rules in place, these strategies in place, these systems in place, these are things that we actually going to take action on, provided, of course, the confirmation is all there. So as I go back here, I'm just about here in 2016.
So real fast, as you're pulling that up, I just want to make sure that everybody understands the importance of tonight's session. This session today is just to get people excited about what they're going to see tonight and tomorrow and all that. Tonight's session is vitally important because it's where we start. Now, again, we don't know. We don't have any of the indications or any of the clear-cut ideas of exactly what's going to happen because the event hasn't happened yet. But what we're going to do tonight is we're going to start to establish these levels. Okay, we're going to buy at a break above here, sell at a break below here. We're going to start to establish the game plan of if we dollar yen as an example. If we break above that 106, okay, what are some of the most optimal strategies to trade? Is a strategy like Turning Point Max going to do the best? Maybe not. We might have to turn on Turning Point Max maybe a week or two after the first break because we have to wait for that pullback first. And so we're going to have those conversations around that tonight to figure out, okay, where are the levels? And then what are some of the most optimal strategies to start trading that? And then tomorrow, that's when we actually start to execute. Hopefully we start to get some breaks. We start to execute those strategies.
Yeah.
Yep. So here we go. Here's the chart of the US dollar JPY. And we could see we had it was a good 400 pip drop initially, and then we saw that comeback, and it certainly went ahead and took out the high. Since it took out the high, then it just created these little flags right here that just broke out. And I think this is Chris. Is this what you're referring to right here?
That's exactly. And so if you just, that's what bull flag looks like. If you flip that over and you go to March of this year, bear flag, like that's what the yen pairs are going to look like. When the yens are trending, this is how they trend. There's no wave cycles in yens. They just go until they need a breath, and then they pause for a little indecision, and then they go again.
But it requires patience on two ends, though. It requires one, wait for the breaking of the close, and two, take your profits, wait for the flag, get back in, take your profits, wait for the flag. And so again, it's making sure it really wraps back to have a plan in place and don't try. I don't think we can try to front run any of this. We've got to have the plan. We've got to just trade the plan. That's the whole key.
Agree.
And I think it's important also to take note here that it took at least 12 hours for it to turn around from being one direction to the other direction. So it was a 12-hour trade. I'm also going to say this, that if we have these sort of moves, if we have a move like this, you're looking at this, you're going, wow, 400 pips. I could take advantage of that. But the biggest problem with when the market's moving this quick, brokers are protecting themselves. They've got spreads, they've got margins, they've got all these things that are restricting you to get into this trade at a decent price. And so what you're going to end up doing is chasing after the market, and by the time you catch up and you actually get into the trade, it's turning around heading in the opposite direction. So be very careful. We speak about this often, and we're going to continue to do that. Is just be very careful about trading on the news, especially at this time. And I think this is bigger than 2016, because this, I think, I don't know if it's happening in your small groups, Chris and Tyson, but there's just every conversation, every time we go to dinner, every time we have people over, every time we sit and go for a golf game, play golf, the conversation that always comes up is, yeah, the election, Trump, Biden, what they doing. It's conversation. It's topic in every conversation, and so this is definitely a big event. This is by no means a small event.
It is. Can I ask you guys something? So I'm personally not going to be trying to capture those 15, 20, 30 pip moves in the short. I'm going to be looking at getting the confirmation, having some levels set up beforehand. And again, we'll talk more about this tonight and tomorrow, but and then setting up trades that are likely going to be 1 week, 1 month, maybe 2 month type of trades. Now, here's the deal. I did the same thing in March, and I was able to turn those, what I thought were going to be swing trades, into shorter term trades because we got massive moves. But are you guys going to look to do some scalping to it? Sounded like, Chris, you were going to maybe do some scalping also.
Yeah, I think, and so Gary made an interesting point about, the margins and the spreads, but think about this. If you're with us for day 2 and we're trading, 8:30 p.m. on Tuesday night, we're not really going to know much of anything until maybe like 10, 11 o'clock. If the election results starting to come in, maybe the markets start moving, but we're in that's the Asia session. I know the Asia session is a little bit less volume typically, but the markets are open. I mean, the only time that I'd really be nervous about illiquid movements and higher spreads, brokers can do whatever they want. But I think the reality is it's going to be like rollover time. I mean, if we're getting involved like late Asia session, rolling into the London session, we should have as good of a window as possible for any decent volatility. So, when Gary mentioned that, that big spike down early 2016, or you look back to what happened in March this year, it's like if we're going to have several hundred pips within a 12-hour period or 24-hour period, I'm looking at something like this. I'm looking for, if I can find a way to get in, it's confirmation first. That's going to be the most important thing. If I find a way to get in, my first instinct is going to be just get to break even. Like, confirm it, know where I'm right, know where I'm wrong, get in. If I'm in profit very quickly, go to break even, give me the peace of mind that there's risk, like there's no risk on the trade. And then I can assess, okay, do I just take profit now and say, hey, that's a victory for the short term? Or do I hold on to it and try to get in some short-term system that's holding? It stays bearish the entire time. I mean, we can look at Right Trader Max to be a good example to show visually. The amplifier is a nice one for me to show visually. I have that on my MetaTrader 4 charts. Like, if there's no reason to get out of a trade, even on like a 1-minute chart, a 5-minute chart, a 15-minute chart, I mean, if I'm break even, and again, I want the 1,000 people that are watching this to be like, Chris, don't get out of the trade. Or we're like, hold it to break even, or use a trailing stop loss. Like, I mean, give yourself a chance, right? I mean, if we're gonna be in the market and we're risk free, give yourself a chance. We're never gonna be mad about taking the profit, but give yourself a chance to be risk free. And then the challenge is manage the profit to the best of your ability. I know that when I take profit early and I close the trade, that's not managing the profit to the best of my ability. To manage the profit to the best of my ability, it's either using a trailing stop loss or using some indicators to say, if it's still valid, it's still bearish, then I should stay in the trade, right? Because I've gotten out a lot of times where I just close it out because it's a certain dollar amount. I close it out because I'm successful on the trade and it's ran, maybe it's 50 pips, maybe 100 pips. But if I close it out and then I watch it proceed to go another 100, 200, 300 pips lower or higher, I will be angry at myself. So I will go to challenge 1 is, let's confirm the trade and be patient on the entry. Challenge 2 is, if I can get some profit and a little bit of a buffer, go to break even or better. Challenge 3 is, if you're in profit and you're watching this thing run, we're going to manage it to the best of our ability. So I think my plan is going to be Tuesday evening as things start to roll in with us. Wednesday's London session and active zone, that's going to be for me, like, I'm looking for the most movement. I think that if the market's going to make some really wild movement and a lot of volatility intraday, it's going to be that Tuesday to Wednesday period. Maybe Wednesday to Thursday is a little bit more straightforward, but I just think that we've had like these just big like floodgates of volatility. And I think Tuesday to Wednesday, we could see that same thing where we've all been bored with like 50 pip daily trading ranges. So I can see Chris, going bananas for a couple of days.
I think we need to put this in perspective, though, because we got different types of traders in the room right now, right?
For sure. I'm not saying it. Look, nobody has to trade with Tyson or me.
I know what you're saying. What I'm saying is, let's put it in perspective for the students right now, because we have different types of traders in the room right here. So, just an example. Personally, I don't want to trade short-term scalps. And the reason for that is because I know that if I get into a position on a short-term scalp, I don't want to go ahead and trade micro lots. I'll probably trade some standard lots, which means I'm loading the bus because I'm looking for shorter profits, tighter stops. But I like to stack in on a position. So if I'm going to go ahead and look at a short-term position or scalp position, it's going to be loaded with quite a bit of lots, and then I'm going to go ahead and stack some more lots in that position. And what I don't want to do is, and Chris, again, this is just me, and maybe some other traders are the same. I'm not looking for that quick run. I think Tyson feels the same way with regards to that. I'm not looking for that quick run for small profits to be generated. I'd rather go ahead and position myself and look at, let's say, if it's a move that's taking place in the European session or the Asian session, I'll go ahead and still want to look at the overall directional bias that I want to go in, then go ahead and stack in on that position. Start off small so that if the market does get more volatile as we go into the more volatile sessions, then at least then I've got enough buying power to get back into the positions at other levels. So I think it's important to realize this here. And I'm going to say this because I think it's also important to know that when you go into trade during these periods, if you normally trade with 0.5% of your trading account, maybe drop it down to 0.01%. Just reduce that risk so that you don't get caught up, because it could happen that we could have movements that could move in the opposite direction by 50, 60, 70 pips, and you've only accommodated at 30 pip stop. And if we get these breakouts, maybe news comes out, something. I mean, we could get flash news coming out based on the election this week. It could be, something comes through the news that indicates that Trump is taking lead somewhere, or Biden is taking a lead somewhere else. Whatever that is, just be very, very conservative in your trading this week. And I know Tyson and Chris will probably be advocating that as well in their trading rooms, and I'm going to do the same in mine. But be very, very cautious and very, very conservative in your trading this week, so that we don't get caught up in things.
Do that and not have to worry about. So the reason traders are afraid to do that is because they're afraid they're going to give something up. But here's the deal: I don't think you're going to give anything up, because we're going to get. So if a currency normally moves 80 pips, and now because of the event it moved 250 pips. Well, you're actually, by risking less, you're still making the same amount of money because you're getting the massive moves. So I don't want anybody to think, well, geez, I got to risk the same amount to make to make, what I want to make. No, we're going to get bigger moves. So you can risk less, but you also have to always think about what is your potential loss. So absolutely, lever everything down, and still be confident that you can end up still making a good amount of money because the moves are going to be so much greater.
And I say participate, get involved, but just be careful and cautious in your trade. Don't sit on the sidelines and say, "Oh man, if you completely if you completely not comfortable trading with this type of volatility, absolutely sit on the sideline, watch it, just build the experience. No matter what happens, whether you trade or don't trade this week, you are going to build up a lot of experience of what happens during these times. And I think that's the important thing right here. You're never going to be a loser. But just from the pure education, knowledge, and understanding of how this market's moved during this period, if you don't trade. But I'm going to say this: if you want to participate with very small and conservative risk, so that you can experience it without getting completely stressed out because the market's moved in the opposite direction. But it's going to be interesting though.
What I think is going to be really amazing is what's going to happen is, look, if we focus on the Forex market, or we focus on stocks, but the markets are going to behave in a technical way. All it's going to do is happen a lot faster. Like that's one thing that's, I mean, and I go back to, the ECB press conference with Draghi, or 2016's election, or Brexit, or I mean, even September with the pound this year, right? Where it's all of a sudden going to be the October 15th deadline, and the pound just tanked for a week. And then after that week, it bottomed out and it rallied right back where it started. Like, there's still this incredible efficiency to the Forex market. And so even though we might see the markets moving from 50 pips a day to 100 pips a day, or volatility is going crazy, you can still, I mean, the hard part is it's going to happen faster. So you have to be alert, you have to be ready, you have to be properly planning and trading with good sound equity management, but we're still going to be able to make sense of it when it's all done. And what's going to be amazing is both Tyson and Gary talked about these larger term outlooks. If we go to like a weekly chart or a daily chart, don't be surprised to see the market testing some big level of supply or demand, some big pocket, some major trend line or support in the market that we can see on a higher time frame. So after all the dust settles, it's still going to be technically obedient, in my opinion. And that's one thing that through
Absolutely.
all this stuff, we build up this conversation. We talk about, all these different hypotheticals. But at the end of the day, this stuff is still going to make sense. It's just going to happen faster,
Sure.
So, I mean, again, look, I want to be trading this week, but I am by no means going to sacrifice or jeopardize a lot of my hard work that I've done this year to be as profitable as I've been. So I want to, I want to take good opportunities. I've been waiting for the last several weeks, but I mean, I'm still long dollar Swiss and I'm going to hold. I'm still long Euro Swiss. I'm long Oz and New Zealand. I still have positions that are going to be impacted by this announcement. But at the same time, I've already committed to those new trades that I'm looking to take. I'm trying to, get in, get to break even or better, and try to manage profit. And if I'm out, I'm going to cut a trade off really early. I might take some pip losses, but it has to be something where I'm not going to cry about the potential loss. But it's like, that's better than just fine. I'll just level into a Japanese yen pair and watch the thing go 500 pips or 1,000 pips the next week. It's like anything's game in this week. So Anyway, all I'm saying is the three of us in this team and everybody that's watching, we will make sense of this market, and we're going to keep each other honest here. We're going to keep each other disciplined with confirmation. I think that's one thing we can all agree on is there's not just some irrational, let's just push play on the robot and see what happens. For me to push play on the robot, I've got to see that we have confirmation. Finally, let's go. Let's see what happens. And then the good thing is I have robots at my disposal. So do you guys. So do our traders. But we have robots that if you want to participate in the shorter term, we have robots that can, within 10 to 20 to 50 pip moves, tops and bottoms, all these aggressive turns, we can get those robots to take profits for us. We can get those robots to not have any directional bias and go with whatever the market gives us. So that gives me a lot more confidence going into however wild and crazy it can be, because the robots are going to be, again, they're not phased by this movement. It's us. It's like our kind of emotional overdrive that we're either overthinking it or trying to be too conservative, too aggressive. So we just need to keep it calm, cool, and collected, focus on the bigger picture, see the big levels, and just trade the right stuff. That's all.
Right, guys. Let's shift this conversation into actual details on the chart right here that Tyson put together on his forecast, and let's go have some conversation around this. Tyson, I'm going to get you to kick us off on this one. You're going to forecast here of the dollar index. You did speak about it early on. Do you want to just add some more conversation around this? This is the dollar index to 2021 forecast that you posted right here.
Yeah, I am bullish, and I've got it broken out on these slides here. And essentially, we are, as of right now, we're putting in an annual money flow pattern that's forecasting a rally. And so it's fairly clear to me these are very high probability trades, especially during election years, and they have a tendency to go at least up to that 382 area in there that you can see that red line that I have going. I think that's right around that probably 12,000, right around 12,250 or so. I think we can get up higher than that though. But you go down and you got kind of go through these, and all of the currency pairs, all of the dollar pairs are kind of forecasting. And again, this is a longer term forecast, kind of forecasting the same type of move. Now, these moves won't be confirmed until the end of 2020. the way that the money flow pattern works is we have to actually wait for the period, and we're looking at yearly, annual money flows, the period to actually close. But based upon right now, what I'm seeing, and the election could change this, but what I'm seeing is I'm seeing dollar strength. And that was kind of goes back to my thesis of I'm a buyer of the dollar. I'm looking for opportunities to buy the dollar. I'm smart and be strategic about it, but buy the dollar regardless of what happens in the election. And I've got some of my favorite pairs. I like all of them, but I kind of broke this down, and my favorite of all is the dollar Swiss. Dollar Swiss on the upside just looks brilliant. It's, if you go down, I believe it's slide 23, Gary. Yeah, and tonight I'll give you guys a more in-depth plan as far as where the levels that I believe are going to. I am bearish, just to keep it simple. We're in technically a money flow pattern forecasted to the downside. Last time this happened in 2008, we were in a money flow pattern forecast to the upside. You could see what happened. Huge rally. I see the same type of sell. I don't see that big of a sell-off, but I see a sell-off coming up. And again, I think it could kind of be the catalyst starts this week with the election, but I'm looking for a big sell or a nice sell-off down. Got targets down, 500, 600 pips to the downside. Tonight, I'll go through a little bit more details on the supply and demand levels I'm looking to trade this down to. And I'll share those workspaces also tonight. But bearish on the Aussie dollar, the euro dollar, same type of thing. It's in a money flow pattern. This has happened 2 times in the last 20 years or so. During an election, 2004, we had a bearish money flow pattern, big sell-off into the next year. 2016, we had a bullish money flow pattern, big rally into the next year. This year, we are poised to set up a bearish money flow pattern, so we could see another nice sell-off. So again, tonight I'll go through the exact levels of where I'm looking to trade that down to. New Zealand dollar, it's very similar to the Aussie dollar, forecasted bearish. Again, I've got levels probably about 400, 500, 600 pips to the downside that I'm looking to go hit. But as we wrap this back kind of to what Chris said, I'm going to be strategic on it. I'm going to not just short. I'm going to wait for confirmation moves and wait for certain things to happen for me to really start to step in on the bearish side. But I do like the bearish side as of right now. There's only one currency, or I'm sorry, there's $3 pairs that I have no forecast on. And before I get to my favorite, the 3 that I really have that I'm not necessarily, I'm going to trade, but I don't necessarily have any crystal clear forecast as of this moment, is the pound dollar, the dollar CAD, and the dollar yen as of right now. So I think we need to be a little bit more strategic on those 3. If I had to make a choice on those, I would be more bullish the dollar on those. But again, those are ones that I'm going to kind of step aside on for now and wait for more confirmation. My favorite of them all, just technically speaking, is the dollar Swiss. Dollar Swiss, we can see in 2004, we had an absolute 100% confirmed money flow pattern to the upside at the end of that year. That was an election year. Nice big rally up, tested the 2004, went back up to the 2004 highs. 2016, we also had a bearish money flow pattern confirmed. That then in 2017, we sold off and went down to the 2016 lows. So what that means is I'm looking for a rally back up in the dollar Swiss with everything that I'm seeing up to at least the 2020 highs. So essentially from this point here where we're at all the way back up to at least the 2020 highs from now through the end of 2021. So again, in the session tonight, I'll kind of go a little bit more in depth in details on the exact demand levels I'm going to be trading to, but it's very clear for me. I want to be a buyer more of the dollar, and the dollar Swiss, technically speaking, is the one that's setting up the best right now, especially for like a turning point trader. I think this is a phenomenal turning point currency that you can turn on the automation, let the turning point pinpoint your entries and trade those up. But again, tonight we'll go over the levels that I'm going to be trading up to.
All right, thank you, Tyson. And so I'd like to just also touch on a couple of things here as well. I've identified that there are 3 types of strategies that can be traded during this election period. And Tyson's mentioned, Chris has mentioned a couple of them right here. But let's go take a look and see what I've gone ahead and post right here. I've said that there are 3 types of trading opportunities. Now, these are strategies that can be traded. We've got EAs, we've got systems, we've got all these different types of ways to trade the market, and definitely we should be looking at breakout strategies. Chris mentioned about the US dollar JPY, the levels that he wants to go ahead and trade above and below. Tyson added to that as well. So there's definitely great breakout strategies, and once it breaks out, then looking for these different bullish flags, bearish flags to be able to trade in that direction, especially on JPY crosses, is absolutely key right there. Also, a very important strategy as well is, of course, a stacking strategy. And I'm going to be talking about this a little bit more in detail in tonight's trading as we start setting up, as well as in tomorrow's once the market breaks out. So we got a stacking strategy where if you commit yourself to a certain direction, if you feel confident that a certain direction is going to move, or the market's going to move in that direction, then you apply the stacking position. Now, what happens is on a stacking position, for those that don't know, is that if the market doesn't go according to your plan, so if you expect the market to dip and then rally, just like we saw on the US dollar JPY back in 2016, if the market dips down and you still feel confident that the US dollar JPY is going to be bullish, then what we apply here is a stacking position. We stack it up, we stack our positions up, and if price moves up, it doesn't break through the level that it broke down from, then you go ahead and make a decision to close out your positions, which means you still take profit off the table. Which stacking position can be very good, but what's important about that, and I know Chris applies it to his trading as well, and I know Tyson does that too, is it's very important to be able to manage your risk correctly. You don't want to have 20 positions in on a trade and be over leveraged on that, and then have no additional buying power that you have to sit in those positions for months and months and months and do nothing, and all that happens is you get eat up by these rollover costs every single day. You don't want to do that. So we'll talk about the stacking opportunity on that. Now, also the other thing that is also a really good trading strategy, of course, is a trend-based strategy. But a trend-based strategy would really be suited for when the market breaks out and then runs. So which means it's a more patient stance, and you're not going to jump in on the trade straight away. In fact, I'm going to be talking about the systems I use for trend-based strategies. I know Tyson and Chris are also going to share on theirs as well, but I'll talk about exactly where and when I'll be using a trend-based strategy once the dust settles and we start getting sort of like a trend move or a directional bias move in a currency pair. We'll use that. So those are the three strategies that I definitely think that traders can apply to the market, which really opens up the opportunity quite a bit. So it doesn't matter really what type of trader you are. If it fits in these three categories, you definitely have an opportunity to be able to trade this market. So everyone can participate during this election period. You just need to be able to catalyze yourself as to what strategy is going to be more favorable for you during this period. Now, also what we're going to go ahead and take a look at as well is these are the pairs that again, as Tyson, I'm going to go ahead and talk about these a little more in depth inside the second part of today's session, which is going to be this evening. And we're going to talk about the breakout strategy on the pound Swiss franc. So we definitely got one strategy that I can go ahead and use as a reference. Pound Swiss franc. We'll talk more about that in this evening's session. The next one is going to be on the pound JPY. We did speak about it earlier on. There I am applying a stacking strategy on the pound JPY. So if price moved down, in fact, we've already started that process already, and we've got positions in on that trade already. We'll talk a little bit more about that and what that looks like. And then finally, our last and final one is the US dollar JPY. I'm going to be applying a trend-based strategy. I'm also going to show you how to use an EA, an automated system, and how to be able to apply that to the market. And just like Tyson, in fact, Chris mentioned it. Just like Chris mentioned, he mentioned that above 106 he's going to be bullish on this. Well, we can absolutely be bullish above 106 and use a trend-based system to be able to trade once it's above 106. So using automation can be absolutely useful, especially when you're looking for the market to break out above a certain level. And when it breaks out a certain level, whether it's 106 above, you want to trade bullish, or if it's below 104 and you want to trade bearish, it doesn't really matter. You can set up your system to be able to start automatically trading once we get that breakout above and below that level. So again, those are the three examples of those different strategies on the pound Swiss franc, US dollar JPY, and then of course on the what was the other one? Pound JPY. So those are the three types of strategies, three examples that I've brought up. We'll talk more about that inside tonight's session. Chris, do you want to add on certain things that you want to be paying attention as we go into this evening?
Yeah, I would like to also throw the Aussie Yen's hat in the ring for some analysis, just because I think that one correlates pretty nicely with having, a true risk-on, risk-off flow. We should see that really reflect in the Aussie Yen. The structure we have in the stock market that is mirroring that. If the Aussie Yen, pops up to a certain level, I think we're going to have, both of you talked about a Euro Yen buy trade, a Pound Yen buy trade. You kind of like that structure. I could see in the near term, the Yen weakening a little bit. Maybe the dollar yen does break that 106 level, but Aussie yen I'll throw in for tonight for my little portion. I'd also like to throw in, we're putting a lot of emphasis on the U.S. election, but to the flip side of that, there are other currency pairs that aren't as affected by this election as others. And so we're in the process of having a Q4 prediction that we're calling a play it safe prediction, because we're looking at some really good currency pairs with some really good alignments that have very little to do with what the dollar does, what the election outcome is. And I think for some traders that are like, hearing us talking about all this short-term volatility and all this crazy wild, that it's like, look, at the end of the day, my style of trading is not about, I don't like to get the adrenaline of getting in front of my computer to press the button. Like, those times are done. Like, I just want to make money. So if it's easier for me to take position trades and worry about, the next month or two of where I trade, and have it be somewhat immune to the election and immune to the near-term noise we're going to deal with, then let's talk about that tonight as well for kind of a game plan. So I'd like to throw that out there as well.
All right. Do you realize that, Chris, that if you want to make money, sometimes you have to get your hands dirty? No, I'm just kidding.
Yeah, I do.
All right. Well, that's great, fantastic. Listen, we got a lot of conversation that we're going to go ahead and carry on to this evening session. So we're going to end off with that. Tyson, Chris, you want to go ahead and say your final words as we head into the close of this session, and then drive us into the second part of today's session.
Yeah, I'll just say, kind of second everything that you guys have already said and what Chris said. I'm gonna come in tonight with a pairs trade in the market. So set it up in a way that whether we go up or down, we're gonna try to make money. And we'll talk about that tonight. There is ways that we can structure trades where we can really put the odds in our favor, regardless of what happens. We just need movement. So we'll talk about that tonight. We'll talk about, as I mentioned, dollar Swiss, but not just the dollar Swiss, as Chris kind of alluded to. I love the Aussie New Zealand. I love some of the Aussie pairs, also Aussie Yen. I like some of the pairs that we'll talk about there. Structuring a plan. What's cool about tonight's session also is that Gary, you're looking at the pound Swiss. I'm not looking at the pound Swiss, but based on what you're going to be setting up, I actually might add the pound Swiss on my list of currencies that I want to trade and maybe deploy a strategy on. So excited about that also. So tonight's session is going to be fun. We're going to have exact levels, exact kind of strategies we want to deploy, how we want to deploy them. And then tomorrow it's just, let's let it all kind of come together and let's make sure we're following the formulas, following the rules. And as Chris said, let's try to make as much money as we possibly can.
Yeah,
Chris?
I mean, the market's been forcing us to wait for the last few weeks. We've had some intermittent moves on the dollar this last week. The dollar sold off as the market sold off. Here we are just kind of, choking off volatility again, but we know why. We know that the markets are typically at a standstill for these major catalysts, and this is as big as it gets. I mean, as far as having something premeditated by the market, having something anticipated, we all know that it's going to be messy. The next 24 to 48 hours, anything goes. So forecasts are out the window, but what we do have to do is we have to focus on the charts, focus on the levels, make good decisions. And, we appreciate all the comments that have been coming through as traders have stayed active today, but we have a great team. And the three of us, we trade right alongside each other. We agree sometimes, we disagree sometimes, but we value each other's opinion. So how we're planning our trades and how we're trading together and what we're doing on our own respective accounts, like Tyson said, I mean, pound Swiss. In fact, just as we were in the session, I just kind of boxed out like where I see the pound Swiss, and I'm looking for clean breakout levels. So I'm going to try to keep the overall levels really clean. Don't miss tonight's session for sure. Make sure you get the link also for day 2 and day 3. It's going to set you back a whopping $5, and you'll be taking and applying all the stuff we talk about tonight. And we're going to be trading for the next 2 days together. So I'm super happy that we've been doing this. I think this is going to be an awesome 3 days, and just look forward. And again, for people that are in this right now, if you know anybody else or other communities, if you want to get people in, I mean, I can post the link in the chat if you want to copy and paste or what you had received an email, like send that out. Send that out for even the day 2, day 3. Like send that out and have people sign up with us and join us this week.
I'll say this real quick, the last thing, because I love kind of going out on a limb, and I don't mind putting myself out there. Tonight, I will tell you my opinion of how I think it's all going to play out, and I'll give you guys who I think is going to win the election.
Oh my gosh.
You guys don't need to tell who you think is going to win. Who I think is going to win doesn't necessarily mean who I want to win, but I will tell you that tonight.
All right.
Okay, then. Now that will be interesting.
Yeah.
Now, either
Tyson,
this year,
I'm even going to show up tonight for that.
I'm going to say this, Tyson. Depending on who you select to win will be dependent whether or not I swipe you left or swipe you right in my Facebook. But I'm just saying. All right. So let's see. Hey, students, I just want to show the appreciation of you guys being here and all the comments, as Chris mentioned, all the comments you guys are posting. Great, fantastic. Everyone's excited about what's going on. We're excited about what's going on. There's a lot of stuff still to go ahead and discuss. So day 1, second session is going to be awesome. As we start preparing, setting things up, we're going to be talking about the different types of strategies, systems, the whole shebang. And then, of course, day 2 and 3, as things start coming in, the results start coming in, we're going to go ahead and start still addressing the market, addressing it, the way we're going to trade it. But I think it's important right here, and and I think Chris and Tyson both agree, it doesn't really matter who wins based on the trading side of it. Obviously, we have our own personal beliefs and personal likes. But from a trading perspective, it doesn't matter whether Trump wins or Biden wins, because the technicals are going to speak about the decisions that we're going to make, right? The technicals are going to tell us whether we're buying or selling a certain currency pair. And again, if we look at the euro as an example, US dollar JPY, whether it breaks north or breaks south, depending on who wins and who loses, it doesn't really matter because we're still going to trade that, right? So when we look at the markets, and we address the markets in the next few days, or next couple of days, keep that in mind, that the technicals are always going to speak to us about the decisions that we're going to make. And we're going to follow the technicals and trade by the chart and not a heart. We definitely want to trade by the chart and not a heart. We'll talk about all that stuff as we go through the next couple of days. It's going to be absolutely awesome. Looking forward to you guys being there, and we want to thank everyone for being here today. Once again, just a reminder for those that have not subscribed to the channel, please go ahead and do that. We'll get videos out that you'll be able to get access to as a subscriber. Secondly, smash the like button. If you have just joined us, smash the like button due to the video that we're going to be posting. It has been recorded. You'll get the recording. It's all going to be available for you. Also, very importantly as well, make sure that you comment inside the video and give your comments on who you think is going to win. Maybe we shouldn't do that. We just want to keep it friendly, right? So let's just go ahead and comment in the video about the content that we spoke about, and we'll get someone to respond to you through those levels of communication. So with that being said, have a great afternoon, and we'll see everyone back again this evening for second session, part 2. All right, see you then.
Thanks, guys.